This is massive for Palantir. We finally have confirmation that Palantir is a $1 trillion company and a $500 stock. The question is when, not if, and yet 90% of retail investors will completely miss it. Absolutely, like every single time, nothing changes. Now, since you're on this channel, it's not going to happen. So don't click nothing, don't smash nothing, don't buy nothing. Listen, this is going to be the most deep dive, the most thorough review of the latest financials of Palantir. Not because I'm the smartest, it's because I've actually done the work that most people don't want to do. Certainly not mainstream media. Usually the way earnings call play out is that we have the presentation, we have the highlights, the main numbers, we have the earnings call, and then people move on to the next news cycle. But a day later, we actually have the filing, the 10Qs, the quarterlies, 150 pages of information, critical information about the company. And sadly, nobody wants to see that information. Everybody's focusing on the tip of the iceberg, folks. This is the investing story for 90% of retail investors. Everybody's fixated about this, about the tip of the iceberg, about price. 90% of investors only care about this. The earnings came out, we had the hoopla around it, the price dropped, people came to certain conclusions, and now they have already moved on to other things, bigger and bigger things. But the real story is actually hiding below the surface level. It is the whole iceberg right here. We're talking about margins, we're talking about potential, we're talking about balance sheets, we're talking about the quality of management, we're talking about growth, the business model. All of these things, what's going on with them, the update. Are they getting better? How much better? All of this information is provided to you for free in the 10Qs that they filed just a day after the earnings. But again, nobody wants to do the work. Nobody wants to finish that 150 pages to learn about the company, actually do due diligence about the company. Everybody wants to be fixated on the price. And this is why, so far, 90% of people have not fully utilized the potential of Palantir from 2022 until now. They've made some money, but not the full potential. Now, obviously, it doesn't happen to my community, it doesn't happen to my students, to my academy, but the vast majority of retail investors out there, they're here. Now, what I've done, so you don't have to, I actually went ahead and read the full 150 pages, and I've basically made a complete deep dive covering every single little detail you need to know about Palantir, the business, all of this part right here. And I will also show you today why this latest earnings convinced me that Palantir is now certainly 100% a $500 stock and a $1 trillion company in the making. Now, when I say 100%, we got to put a little caveat in that. Nothing in investing is 100%. 100% based on what we know today. Tomorrow, aliens can come, the world can go. I mean, things can happen. Obviously, nothing is 100% in life except death and taxes. But given what we have right now, given the information we got in the latest earnings, Palantir right now is on a trajectory that's leading 100% to a $1 trillion valuation. Of course, assuming they don't get derailed by things we don't know, unknowns. But that's always the case with any investing project. Now, enough of me blathering here. Let's go forward. Right now, I want you to take a look at this thing right here. Right? What most people in the stock market don't understand, and the same story happens with Palantir every single year. The same happens with other companies. Right now, it's happening with Tesla. Is that they get fixated on the price, but what they don't notice is that the holy grail of investment, the perfect setup of investment, actually happens when the vast majority of the market is selling, when the vast majority of the market is not excited about a stock. This is the chart I'm looking for every single time. This is my holy grail. I want to be buying when the price is dropping, while at the same time the quality of the business is going up. If I can find a company, if I can find a stock which has an incredibly improving business and yet a stagnating or declining price action, that is my massive opportunity. And in today's video, since you all know what happened to the price action, I'm going to show you what happens with the other line, with the business. Let's focus on the business. And I'll show you why, despite the decline in price after the earnings, the quality of the business has improved so much that Palantir at this point is absolutely unstoppable. This is literally the next Microsoft level company in the making, and yet most investors, again, refuse to do the work and actually analyze and figure this out on their own. Hopefully, since you're watching this video, you're not going to be in that camp. Now, Let's start with some dry numbers. I apologize for that, but we gotta do it since we gotta set some boundaries, right? So Q1 numbers are absolutely insane. $883 million of revenue in just one quarter. Palantir did $1.5 billion in a whole year just a couple years ago. We're talking about an annual run rate of $3.5 billion based on this pace. We're talking about the fact that this is the fastest growing quarter that Palantir had in 10 quarters. And this is happening in a very, very strange, uncertain times. Definitely, I would say, shaky macroeconomics. And yet Palantir delivered insane mid-30s growth on their earnings and a 24% net income margin. Palantir is banking 24 cents on the dollar at the end of the day in their bank while growing at mid-30s. That is a unicorn, and I'll show in a second how the pace of improvement of Palantir is improving exponentially, exactly like I predicted back in 2022, when most people were not ready to deal with it. Now, let's move on to the next item. So on this slide, again, last slide with boring numbers, I promise you. On this slide, I also want to show you what happens with the balance sheet, because the balance sheet is kind of your scorecard as a management as far as how good you're actually running the business, right? So right now, we have assets improving from 6.3 to 6.7. Cash is 5.5 billion, no debt. Current liabilities are declining. Total liabilities are declining, which is good. You want your liabilities to come down, and you want your cash to be high, and you want to increase your assets. Literally, the perfect balance sheet that you can just think of. This would be the equivalent of taking a video game and building sliders for an NBA 2K player that can shoot 100% and dunk from half court and essentially be the perfect player. Impossible in real life, but possible in the stock markets. And we're looking at a balance sheet that has just perfection written all over it. It doesn't mean that the company is perfect. It doesn't mean it doesn't have flaws. It does have flaws and risks. I'll talk about that as well. But from a balance sheet perspective, this is as good as they get, folks. Now, let's move on to some more interesting stuff, right? I want to show you the development of Palantir 2021 to 2025, right? What happened in this stretch of time from the hype to now? Remember 2021, we had the hype, the stock ran from 10 to 35, then crashed. So what transpired as far as the business? So this is actually very interesting. Look, this is the revenues. Revenues went up from 331 to 883. So essentially, we have tripled the earnings. At the same time, we improved net income. This is the money in the pocket at the end of the day, from a negative 123 million loss to 217 million of net income. That's a 3x. So 3x better revenues, 3x better net income, and operating expenses at the same time also increased, but they only increased by 40%. So while revenues are 3 times better, net income is 3 times better, the expenses to generate all this extra money have increased only by 40%. You seeing the difference here? This is scaling, folks. When the revenues grow a lot faster than the expenses, this is a scalable business. Especially if you look at the assets. The assets went from 3.3 to 6.7 at the same time. So assets have doubled, revenues have tripled, net income have tripled, and the operating expenses are up by 40%. Now, this is scale in the making. Now, this is a 3-year view of the main highlights of Palantir that we finally get now. Since we have the 10Qs, we have the financials, we can actually compare apples to apples, right? So I've actually compared these quarterlies with the quarterlies from 3 years ago. Revenues are up 90%. Operating income is up 220%. Cash is up 115%. Free cash flow is up almost 500% in 3 years. Net income is up 216%. These are imaginary numbers. This would be a video game numbers, monopoly numbers. At the same time, on the expense side, well, as I said before, OPEX, operating expenses, are up 40%, but capital expenditures are actually down 40%. So expense-wise, the company isn't spending much more money to generate all this greatness. This is literally a unicorn, folks. I said it earlier, I'm going to say it again. A unicorn. Why is it a unicorn? Because they can give you growth and profitability at a high level. They have a rule of 40 score of 83. A great rule of 40 score would be 40. A terrific would be 50. With the exception of NVIDIA, that I think has one above 100, I think Palantir has the second best rule of 40 in the stock market right now after NVIDIA. And the one thing that's common to both NVIDIA and Palantir is they both monopolizing their own market. It's just in the case of NVIDIA, people have figured it out. In the case of Palantir, there's still a lot of skeptics and a lot of people who focus on the P ratio and the price action, not on what's going on with the business. Peter Lynch has always said that. It's never ever too late to invest in a great business. Okay? Remember that. Now, let's move on to this. On my own platform, which I've built for you guys, so in fact, it is your platform called Stock MVP, stock-mvp.com. You can sign up, get a 1-week free trial. On Stock MVP, we have something that's called the 10-prong test, and we get a score for every single company in existence. And the perfect score would be 100. If you can score perfectly at each of these 10 tests, well, you're going to score 100, right? Palantir has a score of 90, which is, I think, the second or third highest score we have ever seen on the Stock MVP scorecard. That is insane. They actually scored perfectly in revenue growth, in net margin, in cash, in assets, in short interest, in institutional holding, in scalability, in every single metric you can see. I'm going to put it on the screen just to show you what it looks like on Stock MVP. This is the actual result. The only place when Palantir loses 10 points and gets from 100 to 90 is the high PE ratio, which is a lot higher than 50, which is the cutoff date for us to give them a 10. So above 50 PE means 0. So what we know from the scorecard on Stock MVP is that Palantir is probably one of the best companies in the stock market, but it is not cheap. I'm not going to pretend here that now getting it at this price is hella cheap. It's not cheap. It's trading at a massive premium, and the scorecard shows that. Nothing is perfect. You can always buy cheap garbage. This is paying premium for something that's truly great. Now, let's move on here. So basically, what you're getting with Palantir, and this is very evident in these latest earnings, what you're getting with Palantir is a combo that's very rare to find in the stock market. You're getting something that has a strong moat. Basically, there's almost virtually no competition to what Palantir does. We'll talk about what they exactly do in a second. You have durable government contracts, which means they're not easily cancelable. Those are going to run for the next 10, 15 years. You have accelerating commercial sales, which is out of this world, especially in the US side, non-existent in Europe, which is a problem we'll talk about in a second. The balance sheet is one of the cleanest. The macro sensitivity is non-existent. Palantir has basically shown in this quarter that it doesn't care. It's agnostic to what's going on with the macro environment. And on top of it, we have sticky customers, 124% net dollar retention, which is one of the best there is. And we have a top-tier team led by Alex Karp, who's a top 3 CEO in the world. I mean, it couldn't get any better than that. Now, there are issues. Nothing in life is perfect. Everything has a flip side. And Palantir also has risks and problems that we actually have to address. We can't just ignore them, right? So let's be honest, let's be fair, and let's cover the issues that Palantir still has to conquer. Well, number one, it's a thing we covered a lot, is the client concentration problem. The top 20 clients of Palantir generate about $60 million per year each. Multiplied by 20, you see that there's a huge chunk of the top 20 clients sitting on the Palantir revenue. But the latest filing actually shows us that the top 3 clients of Palantir are actually responsible for 18% of the revenue. So 1/5 of the Palantir revenues are coming from 3 clients. That is one of the worst client concentration risks I've ever seen. And yet I'm not too concerned because these are durable, sticky contracts with legacy clients who are not going anywhere. But nevertheless, this is a risk you have to address. Number 2, no international growth at all. Europe has been basically abandoned by Palantir, whether it's because the Europeans are not ready or whether it is because Palantir is focusing on the US. At the end of the day, there's no geographic expansion, which means that Palantir is highly dependent on the US geography. That's geographic concentration. Again, concentration issues. We have stock-based compensation, still weighted, at 17.6%. It's still one of the highest in existence, but it's still reasonable because Palantir is building a new sales force. There's options. You want to hire top-tier talent, you have to give them stock-based compensation. I mean, Palantir can hire shitty employees and not pay them that, but if you want to hire top-tier talent, this is the cost. And there is no single Palantir shareholder who sees any issues with that. The only people who complain about stock-based comp is the people who don't invest in Palantir, ironically. Now, the valuation is lofty. I'm not going to lie here. The valuation is insane. Palantir is right now trading at a massive premium. And we have a huge key man risk. Essentially, if Alex Karp leaves, I really don't know what's left of Palantir. Alex Karp is Palantir. Palantir is Alex Karp. So we have a huge key man risk with Palantir, much like with Tesla, by the way, and Elon Musk. Now, this is the story of Palantir over the past few years. When we started covering this stock back in 21, 22, this was a story, a potential, a hope, a maybe, right? And we were here. Right now, this stock has gone 1,000% up over the past few years. And now Palantir, based on the numbers we've just seen, have transformed itself from a story and a hope to a high growth compounder. The next phase of Palantir, which to me, the latest earnings make very evident, is the growth, the leap to this stage, $1 trillion market cap behemoth. The Microsoft level company that Palantir is, it's just a question of time until we get to this point. Most people did not recognize Palantir's greatness here. Most people do not recognize that this is not the end of the story for Palantir. It's just a middle ground until we get to the final piece right here. Now, I want you guys to pay attention right now because somehow I'm still dumbfounded, but people still do ask me, what does Palantir do? We're still confused about the Palantir business model. What do these guys do? Tom, explain to us. Okay, so let's do it real quick right now. There's so much information out there. You can watch AIP cons, you can watch Palantir videos on their channel. I actually have a video with test cases from Skywise and different suppliers. There's a lot of information out there about the product. People are just too lazy to read it. But let me just recap it in one slide. So Palantir builds this. This is the holy grail. It's called AIP. This is Palantir's enterprise operating system for large language models. What Palantir now does is that it takes any large language model you as an organization want to work with, it actually implements it inside their own foundry, which is where they take your data as an organization and put it all in one place and analyze it. And they use AI to analyze it so the organization can make better decisions, improve their process, and prevent problems ahead of time. Things like preventative maintenance of airlines, things like reducing the amount of downtime of machines in a factory, things like reducing waiting time for patients, etc., etc. The beautiful thing about it is that it is absolutely industry agnostic. It can be deployed in any industry, in any company, and it's going to make money both from recurring revenue on a subscription basis and based on usage. So Palantir has a double dip. They have a subscription and a usage fee, which means they're making a lot of money. This is the perfect business model. Now, I want you to pay attention to this thing right here. Right? The operational metrics of Palantir are absolutely insane. And this is something that gets ignored by a lot of so-called smart investors, right? We have right now customer count going to 769. That's a 40% increase. We have the average new deal of $8 million. That's the value. We used to be at 5 million. It's a 40% increase. So the average new deal is increasing by 40%. The customer count just grew by 40%. And we're serving every single industry you can think of, starting from energy, health, defense, shipping, airlines, auto, you name it, Palantir is serving it. Now, the big lie about Palantir, and this is sort of thing that drives me insane, is that mainstream media is telling you a story about how this lofty valuation is unjustifiable, how can you buy this company at this valuation, etc., etc., while the big boys have been buying it like crazy over the past few years. You just needed to pay attention. Again, you can actually do this on Stock MVP. Stock-MVP.com, my platform, we have a page dedicated to institutional activity, buys and sales of institutional shareholders of companies like Palantir. And if you had Stock MVP, you could have seen over the past 3 years that institutional shareholders were buying every single quarter. We have a dashboard that would have showed you that. We started with 628 million shares of institutional shareholding of Palantir in 2022. That was 30% of the float. Right now, we're at 53% of the float with $1.13 billion, 1.13 billion shares of Palantir being held by institutional shareholders. So right now, while you were being told to stay away from Palantir because it's expensive, the Vanguards and the big boys and all the institutional shareholders, they basically went up from 30 to 53%. They've now become the majority shareholders of Palantir. It shows you that narrative is the one thing, but action speaks louder than words, folks. Now, basically, the same thing happens with the short interest. Everybody's talking the talk. Palantir is expensive. The valuation is unjustifiable. Sure, buddy. Show me the short interest. Show me the Carfax. Right? So 3 years ago, the average, give or take, short interest on a company was 7%. Basically, 7% of investors were shorting the stock, betting against it. Right now, if you actually, again, go to Stock MVP, we'll show you. Your current short rate on Palantir is 2.3%. Where's all the brave people who are talking about the valuation being lofty? Why, if the valuation is so high, it is so insanely unjustifiable, why is no mother lover shorting this stock? Why is 98% of people are long on this stock at this price? Ask yourself this question: narrative versus reality. Talk is cheap. Actions speak louder than words. Look at the data, not at the smoke screen. Now, this is the part where we got to get shifty, right? Okay. So, Palantir has a lot of price target from a lot of analysts. Now, we have actually implemented our own model on Stock MVP called the SCF, the CEF. And in the CEF, we have 3 different pricing targets for the next 5 years. This is based on my parameters, price targets for Palantir 5 years from now. Bear case, medium case, and bull case. Again, I'm going to show it on the screen how it usually looks like. You actually input your own data, your own assumptions, and you're going to get your model. Based on my model, which is just my opinion, might be inaccurate, might be completely wrong, right? My model says that Palantir bear case for the next 5 years is $197. That's 82% upside for 5 years. The medium case is $354. That's a 225% for the next 5 years. And the bull case is actually $510 per share. That's 370% in 5 years. And I actually think that I was very gentle and conservative with these assumptions. I think Palantir can get a lot higher over the next 5 years. But that's going to be a story for another video we're probably going to do in a few years from now, talking about how everybody missed it again. Now, the short-term warning I do want to issue here, because not everything is green pastures ahead, not everything is blue sky ahead. The stock market is shaky, the macro is shaky, a lot of turmoil right now, a lot of uncertainty, and Palantir also is coming off of a 400% profit over the past 12 months. So, short-term, there is risk with Palantir. Palantir is a very sensitive stock, a beta of 3, which means if the stock market sneezes, Palantir is going to be one of the companies who gets wet the most. It also is up a lot over the past few years. It's trading at a huge premium, and the market is uncertain. There is a good chance that in the short term, Palantir is going to correct down. I mean, who knows? I said the same thing when Palantir was at $115 in February, and I said Palantir can drop 50% in a few weeks, and people thought it was crazy. Then it dropped from 115 to 75 in a month. And people understood what I'm talking about. Palantir can be half of what it is today in a month. It can be like that. And since the market is uncertain, since the stock is up a lot, and since it is very sensitive, there is a good chance that there's going to be a short-term pullback. But that is not necessarily a bad thing. That is actually an opportunity for you if it happens to dollar cost average and reduce your cost base. We'll talk about that in a second. Now, a lot of people will ask yourself this question, and I want you to ask yourself this question, and it's like, why not sell now if you think there's so much risk ahead, and we can jump in back later? Well, the problem is that that system doesn't work. It works in theory, but you can't time the market. People have tried time and time again. It is impossible to time the market. You're always going to get burned. It's like gambling. At some point, you're going to lose the flop. Now, you're also going to be missing the top 10 days in the market, and I've showed you in previous videos why if you're not in the market, missing top 10 days in 20 years can slash your returns by half. Why would you take that extra risk? And also, if you actually don't sell out completely and don't try to jump back in, you have zero stress in your life. You just relax and calm as a cucumber. And on top of it, I actually want to say something. If you are sitting on a huge pile of unrealized Palantir profits over the past few years, you've made 100%, 200%, 300%, 400% Palantir, maybe more in Palantir. We have members in the academy who have made 800, 900% Palantir over the past few years. If you're sitting on big profits in Palantir, unrealized profits, trim 10%, 20%, 30%, trim a little bit. Take that money, get yourself an insurance policy, and now use that money as bank and dry powder to dollar cost average slowly over the next 5 years back into Palantir. And if it drops like crazy, you've bought yourself some insurance, it's not gonna hurt. But if it flies off the handle, you're still in 80, 90, 70%, whatever it is you trim. This is the perfect situation right now to take a little bit off the table and use that to DCA over the long haul, ensuring yourself that if there is a correction, you're not gonna have as much anxiety and stress as most people who have been, absolutely oblivious to this and been complacent. Don't be complacent, be an adult, be a responsible adult. You have a fiduciary duty to the future you to not be an idiot, okay? This is not a cult. There's nothing wrong with trimming a little bit just to get some insurance. You still can stay a lot more bullish than the average person and Palantir and still be responsible. Right now, what most people will do, if they try and time the market and leave right now before things get bad, well, maybe, I'm not saying for sure, maybe what happens is that they time it wrong and the market decides for the next 6 months to fly off the handle. Sometimes that happens, right? And if you've done it and you sold here by accident, let's say that right now we're here. I don't know if that's the case or not. But I'm saying if that's the case, at this point you're going to be saying, well, this is too expensive. I don't want to buy it. This is too expensive. I'm just going to wait for a pullback. At this point you're saying, well, this is already 4 times higher than what I had before. I'm not buying this. And at this point you're saying, well, missed the boat in Palantir. It's gone. This is what happened with Palantir in 2022. Nobody wanted it at 15, then not at 25, not at 35. Nobody's buying it at 50. I mean, nobody's buying it at 70, et cetera, et cetera. If you're going to try and time the market, it might run away from you. At some point, you're going to say, well, I'm not paying 6 times of what I had just a few months ago. And you're going to lose the potential. Just stay in and DC over time. Don't try and time the market. It's a useless game. And again, I don't know what happens from this point on. If we're here, we might go up, we might go down. I don't know what's going to happen. The point is not to predict, is to have a plan to prepare, okay? We'll talk about that in a second as well. So, strategy-wise, I promised you some strategy. Let's do the strategy right now. What you guys are doing right now is, number one, you have to make a budget. Make a monthly budget of how much cash you have at the end of the month. Now, whether you want to spend that cash on having a good time or investing, that's your decision. But from a budget, you have to derive a DCA amount, a dollar cost average amount you're going to invest every single month. It can be $100 or it can be $100,000. It doesn't matter how much money you make every month. As long as you have something left at the end of the month, that is workable. 100, 100,000 or a million doesn't matter. The system is the same. From that point on, you make good due diligence. You learn about the companies you want to invest. You actually obsess about it and you decide which companies you want to own. You decide your allocation percentage, how much you want to allocate for each stock based on your risk profile, your age, all the things we teach Academy how to allocate. And then you deploy 50% of the amount that you have found to be your DCA amount. If your DCA amount is 100, you're deploying $50 and you're waiting for the stock to drop. At that point, you could double down. You play the long-term game. You're running the marathon. Now, again, I said it before, trim. 10%, 20%, 30% trim if you are up big. If you're not up big on Palantir, there's no point in trimming. I'm talking to the people who invested with me back in 22 and are sitting on hundreds of percent of unrealized gain. And at the end of the day, you have to review constantly the thesis of the stock. Trust but verify. You constantly have to review the quality of the work, the quality of the business, the quality of the management, because this is not a religion. If Palantir goes off the handle, the stock loses its shine, you have to get out. It's not a Catholic marriage. You have to constantly verify that the thesis still holds. Now, if you actually want to get Stock MVP and have a tool to help you to do all these things from home, stock-mvp.com. There's a week to try it out for free. See if it's for you. I think you will absolutely love this. We just hit 3,000 members and we're moving to a brand new platform called Stock MVP 2.0. The prices will double. If you get in now, you're going to lock in the current 50% price for a lifetime of use. So now is a good time to join Stock MVP. And if you want to get better at investing, you're welcome to join the Academy, patreon.com/Tom Nash. Would love to see you there as always. See you next one. Peace.